Hey everyone, Chris here. Hope you're ready for some insight on the GBP. The Bank of England has raised interest rates to 0.5% with 7 of the 9-person Monetary Policy Committee voting for this move, which was widely expected to be a positive for the pound. Sterling was sold after the Bank of England raised interest rates last Thursday, but failed to offer any concrete guidance as to the potential for future interest rates. In the event, the bank kept a consistent message that interest rate rises in the future would be needed, but much depends on Brexit and economic data, and importantly, the guidance was left rather open-ended. When asked by a journalist whether we're at the start of a new interest rate rising cycle, Governor Mark Carney did confirm that the economy needs 2 additional interest rate rises to get inflation back to target. So on paper, all that was said was positive for sterling, but it must be emphasized that markets wanted to hear some incredibly positive news to really trigger a sustained rally, and of course in the current climate this was never going to happen. The bank removed the view from the guide that interest rates would rise faster than the market expects, and it was this particular line that signaled to markets back in September that a rise was imminent. So it's not surprising that the market punished the GBP, but I wouldn't wave off the sterling just yet. Overall, I see limited downside for GBP because of the UK's improving balance of payment backdrop and encouraging economic activity. It should take some time for the market to settle and the near-term noise to clear out, and therefore volatility could be the only guarantee for now. I for one am going to stay patient and wait till the smoke clears a bit. Activity in the services industry, Britain's most important commercial sector, rose at its fastest pace since April. Resilient client demand and a solid rate of new orders were cited as being among the factors behind the move. The good news was that October saw business activity across services, manufacturing, and construction grow at its fastest rate in 6 months. The news confirms the UK economy is looking to end the year on a stronger than anticipated note, and while data is unlikely to propel the pound to notable new highs, it does at least provide the grounds for a strong base to form. Technically, the main currency pairs are all on a strong level. For example, GBP USD is on a 1.30 support. Even if it breaks this down, the daily candles should close below this line to have the bulls retreating. Euro GBP are also on levels that don't support the further weakening of the pound. Of course, the pound has a more favorable position compared to weaker currencies like the Australian dollar and the Japanese yen, which are already somewhat corrected. So thanks a lot for tuning in. If you have any questions, just comment below the video. I'll see y'all soon and take care. Bye bye.